All right, let's turn to the market action right now. All three major indices remain in the green. Yesterday, the market's taking a leg lower thanks to that news that Senator McConnell would be holding up that vote on those $2,000 stimulus checks. We're joined now by Eva Ados, COO of ERShares. So, Eva, we have markets in the green again today. I'm wondering if you think that the Santa Claus rally is really in danger because of this back and forth that we do see in Congress right now on those stimulus checks.
So that's a great question. Thank you for having me. We think you're right. It's a very partisan issue because on the other, each party favors very strongly one side. So, and since the January 5th election is so close, if we see a slight movement benefiting each party, that will greatly affect the election. And under certain scenarios, if one party wins, we might see increased spending. That means that interest rates will go higher. The long bond is right now at 1.67%. That might go north of 2. The 10-year, it's right now at 0.97%. That might go north of 1%. So if that happens and we see an increase in interest rates that we are already foreseeing, that will of course be not be detrimental to the stock market, even though traditionally it has been detrimental to the stock market. This time we think it's going to move money from fixed income into the equity market because the interest rates are so low now, so it's not going to have a negative effect to the equity market. On the other hand, in contrast, it's going to actually benefit it.
So I want to ask you about this momentum that we have going into 2021, and let's just say that this Santa Claus rally fails to start 2021 with momentum at least to the upside. Do you think that there's danger to see markets fall further at the start of the new year? There are some folks that say that a correction or some kind of pullback at the start of 2021 might be to be expected.
So that's another great question. So you're right. Some categories are fully priced. We saw the FANGs going up 50 to 70% in 2020. We don't think this is going to continue. However, this was a very disproportionate market. If you look at the Russell 1000, 2/3 of its return this year, 13% out of the 20% actually derived from only 10 companies. And then if you look at the top 20 companies of the Russell 1000, those are all entrepreneurial companies. So we saw entrepreneurial companies getting stronger with COVID, gaining market share from their traditional competitors. We think this dichotomy is going to continue. We would encourage investors to stay on the right side of the chains. There's a lot of change here happening in healthcare and technology and innovation. This is going to continue. Our behaviors have changed significantly, and we think there are very good opportunities in small capitalizations that traditionally and historically have outperformed large caps for over a long period of time. Right now, for 2020, they had lagged far behind large caps until recently. It's only a story of the last 3 months that small caps are actually had twice the performance of the large caps. And we think this is going to continue into 2021. We think there are great opportunities in small capitalizations, entrepreneurial companies, and also some opportunities in international equities.
And you mentioned the Russell, just for everyone at home, the Russell right now up 1 2/10 percentage point roughly, also in the green there, as we're also seeing the other three major indices also in the green. So talking about 2021, we know that markets are forward looking, and there's been, at least when we talk about 2021, a lot of optimism and enthusiasm, especially in the second half of next year. But still, there's a lot of downside risks that are out there, for right now and even into next year. So what are some of those biggest downside risks that you're keeping an eye on, that you think investors should be keeping their eyes on, especially as it seems everyone is thinking the pandemic right now is somewhat in our rearview mirror as the vaccine continues to be rolled out, not just here at home, but also globally?
That's right. So we have the vaccine rollout, which of course creates optimism on the markets. And as you said, the markets are forward-looking. However, some of the risks that we have our eye on, of course, we don't know if the vaccine will create any side effects. We have new strains now in the UK. It arrived in Colorado recently too. We don't know if the vaccines will be effective in the new strains. We also had, as you mentioned previously, some companies and stocks soar in 2020. They probably went ahead of the valuations. So if there's some disappointment there in 2021, those stocks might drop significantly. And of course, the major issue is the underlying economy. There is, of course, in 2020, there was the dichotomy that we mentioned before. There were many bankruptcies, many layoffs, unfortunately. And even though we have some sectors growing like technology and healthcare, and they're hiring people, there's a skills gap, and that's our biggest concern. This workforce that was laid off will take some time to retool themselves and reskill themselves to be able to fill in positions in the growing sectors such as technology and healthcare.
So I want to ask Eva, as you're looking ahead to 2021, and you mentioned some of those names that we all know did really, really well in 2020. And we talked a lot about how 2020 pulled forward a lot of the growth that was going to be happening next year into this year. So what sectors are you liking for next year? Some folks still say that they think tech will continue to outperform and do well. Some folks are pointing to cyclicals instead as leading the market in 2021. What sectors are you liking for the new year? And if you have any specific stock picks, which companies are you looking at?
Of course. So we think technology is going to continue to do well, but we think that there are better opportunities in healthcare. A big portion of the Russell 2000 is healthcare, and that's going to grow, and in a market cap too. And we particularly like genomics. So we have 5 equities in genomics that we follow. They're all small to mid cap size, and it's notable to also mention that they're all led by female entrepreneurs. So that's CRISPR, Intellia, Editas, Twist Biosciences, and Veracyte. They're all in the genomics. Not only have they appreciated a lot this year and created great returns for investors, on average, these 5 stocks have appreciated above 250% for the year, led by Twist Bioscience, which increased almost 600%. Editas this month was up about 150%. But what's most important about those companies is that they're solving real problems. They're creating disruption in healthcare. They're improving patient care. They're reducing unnecessary surgeries. And most importantly, we now have the ability to rewrite our own genetic code to be able to cure inherited and genetic diseases that we never had the ability to cure before. So this is a breakthrough moment in the history of healthcare. And it's very nice to see that. It's also a very encouraging sign that all of them are led by female entrepreneurs, which might show this is a new breed of female scientists in a male-dominated area, biotechnology, and probably an encouraging sign. We're going to see more of those. And it also shows that entrepreneurs can be found in any geography, any sector, any gender, and any ethnicity.
Now, I'm sure there's many out there that agree with me that it's not surprising to see that some of the companies on the cutting edge of technology are led by women. Thank you so much for highlighting some of those companies for us here. Eva Ados, ERShares COO. Thanks for joining us today.
Thank you. Happy holidays.